Guys, how is everyone today? About to kick off this back testing session. This session is going to be great for you guys that don't currently have a strategy, because I'm about to give you a strategy on a plate. So, all right, seems like everyone's joining up. All right, doing good, nice. Okay, so I'm just going to get straight into it, guys. So what I'm going to do is share my screen. Now, what I've done is I've created this. Can you see my screen clearly? I've created this Word document for you that is essentially going to break down the strategy, and then it's also got an example at the bottom here. So what I'm going to do is I'm going to put this in the chat for all of you, and you can all take this away with you today. So 1 second. Let's see, documents. Here it is. All right. So there's the document if you want to have a read through it. It's brief, sort of explains the strategy and how it works and why it works. And then also tells you the entry criteria to follow. But let's get straight into it and start a backtesting session. So obviously, first things first, what we want to do is go to the backtesting page. And we want to create a new session. And we've already created our playbook. Now, I'll show you the rules for the playbook in a moment. But Discord backtesting session. Now, here's the playbook that we're going to be trading: supply, demand, and liquidity. And the pairs that I'm going to trade it on are GU, gold, EU, and DXY. I do have, you can use this on futures as well, like indices, NAS, NQ, ES, all that sort of stuff. But there's various sort of different sort of optimizations that you need to do to optimize it for those pairs. Oh, I'm not sharing my screen. So sorry, guys. 1 sec. That's awkward. Here you go. Right. Did everyone see the document that I shared? Here's the document. This is the document. This is going to give you a brief reason about why it works and the key things that you need to look out for. And then obviously you're not going to understand this completely until you've watched the session today. You can't hear me. Can anyone else not hear me? Or can everyone hear me? You can hear you. Okay, cool. Yeah, so this is obviously the document. If you guys want to refer to this document at any point, but this is basically going to give you a brief overview of what you need to look for. But you're going to see that a lot in the session. So what we'll do is we'll start with a balance of, should we do 1,000, 10,000, or 100,000 to keep it easy? Someone, first one to put in the chat, 100K. Okay, so 10, 100K account, and we'll do the 2024. We're not going to do January because we all know price is notoriously slow around January. So we'll do the first week of February, and our end date, we'll just set it as yesterday. All right. So the strategy itself, right? Let me just show you exactly what we're looking for. So to break down the strategy, we're looking for an area of supply, which would be sort of an area like this. And then where's all my tools? Right, so we've got an area of supply here, but then we're also looking for some sort of liquidity to be built up before this area. Now, if you refer to the document, what I mean by liquidity is some sort of build-up of orders just before the area of supply. So if I come back to the document here, and we read here, so we've got liquidity concepts refers to areas where large institutional orders tend to be filled, typically around swing highs, swing lows, and psychological levels. So that could be, inducement, exactly. So that could be Asia high, Asia low, previous daily high, just a big swing point in general. So essentially what we want to look for is a big wick sort of example. So we want this to not come, imagine this gray box is our supply zone. We want price to come up, not quite tap it, and then come back down again, and then run this area to then tap into our supply zone, which is then we would then look to get in on something like this and right to the downside. So this is the kind of setup that we're going to be looking for today. Okay, so what we're going to do is jump straight into it. Now, first things first, I want to change my candle colors because I want to match it to what my trend view looks like. I'm the typical boring green and black guy, so let me just do this. Okay. And then what time is it on this chart right now? Okay, so it is midnight. So what I want to do, for those of you that don't know your backtesting session, to get through the days as fast as possible, what you want to do is you want to come up here and you want to set your times for your London session and your New York session. So that way that you don't have to skip through price, you can just instantly fast forward to where you want to be trading. And it helps speed up the effectiveness of going through backtesting. So I'm going to skip straight to London session. And what I'm also going to add for this is the sessions indicator, because we're going to be using each session as liquidity. And the rules for the playbook, let me just show you now. Oh, we have to take a trade first. Okay, well, let's take our first trade. Right, so this is what we've got. London's just about to open. We've got this Asia high and low here. Price is obviously very bearish. I think with every strategy as well, it's always important to think what's the higher time frame context looking like, because it's all well and good having a model, but you have to also follow the higher time frame trend, right? Otherwise, it's never going to work. So looking at the higher time frame, we see this massive bearish daily candle yesterday. So instantly, first targets that we would be looking for today is here. And then next targets on the higher time frame, we'd be looking down here at these wicks, right? Because this is where a lot of orders are going to be. So this is essentially areas that price is going to act as a magnet for them price to trade to. So come down onto the 4 hour. Yep, definitely bearish. Not really seeing anywhere for an entry at this moment. So we just keep scaling down timeframes until we finally get an area that we're looking at. Now, what we see here is an area of supply. So I see a 30-minute area of supply here, right? And price has just tapped into that. Now, a supply is the big candle before a move up or down. So let me show you a few more examples. I want to find a super clean one for you guys. So let's imagine, right? This candle here, this bearish candle, I'm going to highlight it here, yeah? This bearish candle, this would be an area of demand. And the reason for that is because it was the candle before a strong move to the upside. And as you can see, when price comes back into this area, it respects it and then continues the move up. So this is where a lot of orders are stored so that you know this is a sort of good area to look for. Now, you don't want to just enter off these areas blindly. You want to obviously wait for some sort of confirmation. So let's go through our first trade. We do have an area of supply here. And another thing that makes these sort of areas higher probability is for those of you that know what a fair value gap is, or sort of imbalance before this supply, makes it a lot more high probability. So if you don't know what that is, we have the indicator where you can just add the ICT indicator and that will now point out that fair value gap to you. So if you don't know what that is, it's easier to spot that way. So we can see here that following the document, all right, we have got, if we scroll down, putting it into practice, we've got a supply zone aligning. So we haven't checked for the liquidity sweep yet, but we've got imbalance present before the supply and demand zone. So now we need confirmation entries with engulfing or market structure shifts. If we go on to the 15-minute, what have we got here? I'm just going to turn this indicator off really quick. So 15-minute, the supply zone would actually be up here. So I would want to, but that's obviously Asia high. So I would go from up here. This is the zone that I would look to trade off, right? Because this is our liquidity here. So we've got Asia high liquidity and that wick there. So I wouldn't want to look for a trade until at least this was taken. And then I would target this level here that we marked out on the higher time frame. Area supply order block, yes, they are very similar. They're not the exact same. It depends what sort of circle that you come from in that sense. Some people call supply and demand order blocks, some people, but an order block does technically have a slightly different definition because it's a build up of 3 candles, not just sort of an area supply or demand. So this is what I'm looking for. So Asia high and low, this is liquidity, right? I've got this wick here just before my supply zone. So what I'm going to do is, now I've got this marked out, I'm going to wait for price to come up to that zone. And if it does, it does. If it doesn't, it doesn't. So let's play price and see what happens. Okay, let's skip through a little bit. Now what I like, okay, so we're at this area. Let's go back one candle. Okay, so we're at this area. Now what we want to wait for is sort of a market structure shift or some sort of bearish candle to tell us that the market's moving down. Now, what do I mean by that? So I want to look for, as I pointed out before, price to come into this area and on the lower time frame, break a low, come back and then drop off like this. So let's see if we can get that sort of formation happen on the lower time frame. So we come onto the lower time frame. My personal preference for the lower time frame is the 3 minute. All right. So if this is our liquidity that we've taken out here. Let's just mark this up. Oh, those are percent. We want dollars or pounds. I'm English. I guess it's fair. So we've got our area of supply. We've got our liquidity taken out. Now we just need a market structure shift or a really bearish candle. Okay, so that is obviously a very bearish reaction. So let's see if we can get, so we've got a break of this low. So let's see if we can get an entry. What I would want it to do is at least come back up to 50% of this. So I'm going to use my Fibonacci tool to draw out discount, which is here. So if price can come back up to this 50% level, I'd look to take a sell. Let's see if it does. Okay, we do actually come all the way back up to the top. Now what we have here is an area of supply in the lower time frame. So price is obviously fractal, right? So fractal means in this sense, whatever works on the higher time frame also works on the lower time frame. So just because this setup is set up on the 15-minute doesn't mean that it then won't work on the 5-minute or the 3-minute or the 1-minute. You can use this on any time frame. It's just a lot easier to do on the higher time frames because then, of course, you know, you have more time to think, you can process things better. So we're going to look to take a sell here. I'm going to draw out my tool. I'm going to enter here and my stop loss above there. And I'm going to target this level down here, as I said. And let's do an advanced order and we'll do 1% risk for today's session. So we'll sell there. And then let's see how it goes. Okay, so we're in the position now. So now what I want to do is I want to come over and just check off my playbook. So I know that after I finish my backtesting session, my issue was not my strategy, like not myself, not my head, and I am following my rules. So I've got a higher time frame key area, aka an area of supply or demand, in this case supply. Yes, this is that, right? We marked this up. This is our higher time frame area of supply or an order block, whatever you guys want to refer to it. This is liquidity taken before the higher time frame key area. Yes, we had the Asian session liquidity, or you could just see it as this wick here, this sort of build up here. And we took this out and it was right before this area of supply. So it was inducement into the zone. And this is where the early sellers got in and then price came back up to take them out. Now we also have all this liquidity down here built up. So as you can see, all of this here, see all these wicks, this is underneath every one of these wicks, there's orders to be taken, okay? So all that needs to go as well. So that gives me an even higher probability in this trade. Did we have a lower time for a market structure shift with displacement? Yes, we did. We broke this low here. So let me just mark this out. Market MSS for market structure shift, okay? And then, yes, we got that. Our entry is in discount because it retraced over 50%. And I've got a predefined stop loss and TP. The trade must be inside New York or London session. So it is inside London session. So yes. And we're just going to do 1% risk today. So we're not going to follow this particular rule. Just to optimize your backtesting session if you're trading. So I'm going to mark each one of these setups. So after when I go through this, I can go through my tags and really get into my data a lot more effectively. So 15-minute supply, entry time frame I entered on the 3-minute. I don't need to do any of this yet. Yeah, this is all fine. Out of interest, who'd you learn supply and demand from? I didn't really learn from anyone. I've just been doing it for so long that even before sort of YouTube was a thing, and you would learn from YouTube, I just started to spot these zones out of my own eye. And then in the last sort of 3 or 4 years, it started to become more mainstream. And then sort of everything that I kind of thought and suspected started to kind of become validated, if that makes sense. And then obviously other people had refined things that I sort of learned from. But yeah, let's see how this, okay, so we're straight into profit, absolutely melting, lovely stuff. And as I said about taking out this trend line liquidity, now this does look really bearish. So this is something where we could have looked to extend our targets, because if we look how bearish this hourly is, where was our next target? We said all the way down there. So let's move our take profit and just take 50% here, because it's not even in London session, New York session yet. Okay, let's close a partial. So we're going to come down to here, go to our open positions, press this little adjust position here, and we're going to close 50% of this off. So we'll close 10 lots. And there we go. That's profit locked in there. And then what we're going to do is we're going to trail our stop loss down to about here. And then we'll see if we can leave this to run. Because if you remember how bearish the previous daily candle was, gives me quite high confidence that this is going to sell off quite a lot. Maybe not to there. We'll see. See what happens. Let's just play it all the way up. But the second New York closes, I would get out. I don't like calling trades past New York. Let's bump this up. So New York's just opened. We're getting quite close there. New York's closed. All right, so I'm closing this out because I don't like calling trades past New York. So exit strategy, manual close. And then I'm also just going to put out of trade times for the reason, just so I know when I come back to it. And then I'm also just going to take a screenshot of this and annotate it. So I can put 50% closed here and fully out New York over. Okay, so that's a pretty banging start. And then let's just go in and add this so that when we're reviewing our trades later, we have this here. I don't think for backtesting it's necessary to sort of journal everything, because I think as long as you know why you took the trade, you understand the process behind it, you don't need to sort of like, you're not going to journal about your emotions in backtesting necessarily, unless you do make a mistake and you write about why. So maybe I could write something about daily candle was bearish, so I extended my TP. Maybe it's something like that, but if it's just constant setups over and over, there's no real need for that. So let's close this. Oh, I deleted the stop loss. Yeah, I want. Right, so we are up 9% already. Now that's a bit outrageous, to be honest, but let's go to the next. So now what I've done that is I'm going to go to the next sort of session, so start London session tomorrow, and just skip like that, and now I'm here again. So now I look through my next setup. So starting again, what's the higher time for context? Is your tag structure available? I've not been sure how to use that part of the ball. Yes, I can show you and send you a screenshot after this. So higher time frame context, we're still looking to take out, oh no, actually. So we've got this higher time frame area of demand here. Now you can see when I said the bearish candle before a bullish move up, or the bullish candle before a bearish move down. So that's this bearish candle here. That's our area of demand, right? Now we've tapped into this area of demand. So let's see if we can get a reaction here using our entry model. Now we have also got another area of demand here that we've just tapped into. And it does have a fair value gap before it. We've also got this area here that we're looking at on the 30-minute. I would probably look to enter from here, because if you see, so as I said about the inducement or the liquidity to take out before, we've got this liquidity here to take out before and just before our area of supply. So we want an area of supply, and then we want liquidity / inducement to take out just before that area. So this is our area of supply. This is our liquidity to take out. So let's see if we can get a pullback into this area. And if not, then we don't have a trade today. So London session's just opened up. Let's see what happens. Okay, it's coming down. Okay, we do get a tap into that area. So now let's go into the lower time frame and see if we get our entry. Now, if we remember our entry, this is just a simple market structure shift. So the previous high would be here. So we need price to close above this high, and then we'll look for an entry. Okay, so we also get a sweep on the lower time frame just before the market structure shift, which is great. That gives me extra confidence. Let's see if we get it. Okay, we do get it. It's quite an aggressive push away. This is now our area of demand to enter from. So let's see if we can get a pullback into there. And if we do, we'll look to take an entry. So let's mark up our entry here. And we'll just do our first target, literally. We'll do London's high. Although London's over, so we might have to wait till New York opens. Advanced order, 1%. You can also just buy, quick buy down here for those of you that don't know. I'll send anyone who wants the recording after, don't worry. So let's do that. And we're just going to set this as a limit order. And yeah, so let's just drag that there and press buy. So we've got a 1 to 5 on that. If it comes, is he going to take us in? Okay, we get tagged in. And we also took out this sort of liquidity here. So you can see this little bit of inducement just before the supply area. So that makes me quite confident in this. Let's see if it runs up. We do reject. Okay. Possibly we could look to close some here and extend the TP. We could go, to be honest, I'm quite happy with this. I would just take this. On a regular normal traded day, I would 100% be happy with this. If it even hits it, yeah, and we get the full TP. So let's take the screenshot, put trade notes, and let's put that in. And then let's also tag. So what did we enter off? We entered off a 15-minute demand area. We entered on the 3-minute, and our exit strategy was TP here. I had quite high confidence in that as well, so we'll tag that. Okay. Are you actually setting a limit buy order at the top of the liquidity area box? How do you mean? I put my take profit up there and my entry, I put a limit here. You can see the arrow that says my actual entry. Does everyone understand though what I've shown so far? So I just want to make sure everyone's on plane, right? So as you can see, look at the similarities between these previous trades, right? You can see an area of demand with liquidity taken before. So let's just mark this as liquidity again. Right? There's the area of demand. There's the liquidity. It taps in. Then we look for our entry. Right? Same as our previous trade. The exact same. Right? We had our liquidity. We had our area of supply. Then we looked for our entry model. The exact same thing. Can you see how repeatable this process is? How many trades do you get in these setups? You can probably get, if you really want to and you trade enough pairs, you can probably get 3, 4, 5 a week. Maybe like there's no limit, as I say, price is fractal, so you can keep going lower and lower time frames and more setups will appear. But I personally like to stick to at least the 15-minute just to make sure I get the highest quality setups. And then you can also pair this, say for example, with DXY. So if I put up multiple charts and I want to put DXY up here just for confidence, for those of you that don't know, DXY is the dollar index. So you sort of use it to gauge essentially DXY does the opposite of what any other sort of dollar pair would do, right? So if DXY is going down, then GU in this case is going up, right? Similar with gold, not as much though. They are correlated, but not as much, etc., etc. All right. So this is really, I think this is a really simple but effective strategy, and I've used this to make, I don't know, quite a lot of money over the years. So I know it works. So if you guys want to steal this, you can. I think it's quite simple, easy to do. It's quite mechanical as well. Your entry is just, you've got these clear rules for your entry that it has to be in discount, it has to make a market structure shift, and you only enter off these order blocks. If the trade runs without you, it runs without you. It's one of those. So let's clear this up. And let's see, we're still in New York session, so we might even get another trade here. And now I'm just going to delete this. What we do have is we have this area of supply again here. So let's see if we can come back to tap into that. If we do, I'd still be interested in looking for a long. No. Okay. Today's done. So that's it. That's it. We got that one trade today. Now we go to the next day. Start a London session, skip. Right. Now what we're looking at, let's clear the chart. So our higher time frame, it's been a few days. So let's adjust what we're actually looking for here. I still think we want to come down to take out this low eventually. So we're still bearish overall. However, we've got all of this up here. We've got this area of supply all the way at the top on the higher time frame that could possibly retrace to. On the 1 hour, we've got this area of supply here. Right? Is everyone starting to spot these areas of supply and demand? Oh, look at that. How convenient. Just before, oh no, it might have actually tapped it. Yeah. Okay. So if price takes out this high, right, Asia's high and this liquidity, same process as before, right? Takes this out, taps our supply. We get our entry model. We'll look for a sell. So that's what we're looking for today. Let's see if we get it. All right. Price comes up. It taps in. Let's go to the lower time frame, see if we get our entry model. Nothing yet. So for a market structure shift, this low here would have to be broken. Still valid at this point. Can we break it? We don't break it. Now, can you see, as just a little thing here, can you see as this low, instead of breaking it, because it wicked and it didn't, it then shot straight up. So that's another way that you could sort of trade with liquidity. So as you can see, all the liquidity was here. So it took out this low, picked up all these orders, and then carried on to the upside. But there's no trade there. We never got our entry model, and it does look like it's going to continue going up. So where's our next area of interest that we want to look for? We either want to look for buys from here, from this area of supply. Again, the bearish candle before the push up. So as you can see, this move here was quite impulsive. So this is the bearish candle before the move up. So let's see if we can get a pullback into that area, as that's what I would be looking for now. Okay, London's over, so we've got to wait for New York. Is there anything there that we could be looking at for sales? Sales isn't really my favorite there. I think this is a no trade day, to be honest. Very choppy, rubbish price action. Look at this. This is just accumulating. So if we can get either side of this taken out. No, nothing there. All right, straight to the next day. No point in wasting around. Didn't meet our rules. Let's not do it. I was just curious if you wait for price action, then enter with a market order, or you previously set a limit order with stop loss. I previously set the order. So the order was a limit and it had a set stop loss and TP. All right, so the next day's open. What are we looking for? Same process again, absolute same process. We start on the higher time frame. So we've got the 4 hour, right? So we've got this 4 hour area of demand here. I would love, and we've also got this liquidity here built up. So there's our liquidity before the area of demand. Again, really repeatable process. All right, so now let's see if price can come down, take that out. Now on the 30-minute and the 1 hour, you can obviously see this refined here. So you can use the lower time frame to sort of refine your supply and demand zones and make them more accurate. Let's see if we get an entry. Okay, so price comes down, takes out the liquidity, and it does just react straight off there. Is it going to come and let us in? Okay, so now we're in that area of demand. Let's see if we get our entry model. Price would have to close above here for me to be interested. Okay, so we're reacting. Absolutely nothing, no trade. So is there anything I missed here? It's important to always look back. No. So the next area of supply that now we're looking for sales, as I said, overall, okay, so there was this area here that we could have looked to sell from. So I did miss that. That was a potential area. However, it was a bit choppy and it wouldn't have been completely optimal. As I said, we still want to look for these overall bearish bias. So let's see if we can pull back up to there in New York session. Oh, it is coming. Is it going to get up there? Okay, we do get up there. Now let's see if we got our entry model. So we've got our area of supply. This would be our inducement here, or our liquidity. So let's see if we get our entry model. So I want to see a close below this low. Now it would be a close below this low. Do we get anything? New York is over, so we shouldn't really be taking a trade anyway, but close below this low would have done it. Sadly, in our rules, we can't take trade this late, so let's see what would have happened though. Okay, and that's the exact reason we don't take trades that late. Honestly, I would still be interested in sales from this area. Do you not use structure when trading supply and demand? I do use structure as long as my higher time frame bias aligns, which my higher time frame bias is bearish. It varies day to day, right? I'm an intraday trader, yeah. So I'm in a trade for 2 hours sort of max. So necessarily it doesn't always matter, but for the highest probability trades, you do want to just go with the trend. Let's see. We've got this liquidity taken out here. And we do have this supply area right here. Let's see if it can tag it. Okay. I doubt this, but let's see. Never know. We might get an entry here. I want to see price close below this low. Okay, price closes below that low. I'm looking for a trade here. So let's mark it out. 50% is what we need. So I want to enter at least there. I'm not feeling amazing about this one though, if I'm honest. We'll run it. We'll run it. Let's enter there. Stop loss below above there. And we'll just target ages low as our first take profit. And then we'll go break even at that point. And then, but we'll target all the way down here at these lows. Let's see. Let's add a limit. Sell limit. And price goes without us. Now, there are different ways that you can enter. You don't always have to wait like this. So, for example, a lot of people who trade similar to this would have entered off this here. So this sort of area of demand sort of flips into an area of supply. And then you could have entered here off that, like that, stop loss above that high, and you'd be in this trade now. But as I say, this strategy is sort of, it's one of those ones where it does work, but we've backtested how many days? 3 days we've backtested so far. So that's 2 trades over 3 days, and we're up. No, how many trades? Yeah, 2 trades so far we've taken, and we're at 14%, risking 1%. So it's not too bad. I want to make sure everyone's still following though. Is everyone still understanding this? Does everyone get the strategy so far? I definitely want to get a few more examples for you guys. The idea is I want to keep it as simple as possible. So this is our area of demand here, and we want to see price pull back to this area of demand and then look to move up. And we've also got that fair value gap there before. So let's see. Refinement wise, I would still probably look for that. So price traded into this 15-minute area of demand, and then it shot up. So now I would probably look for all this imbalance to get filled up here, and my bias would be up to this area at the top, and that's so I'd now only sort of be looking for longs. Can we watch this back to make sure? Yeah, of course. Okay, amazing. Glad you're all understanding. So but does everyone understand how to sort of recognize a supply and demand area? The bullish candle before a bearish move down, or a bearish candle before the bullish move up. Okay, I just want to make sure everyone understands how to recognize these areas and spot them. And don't forget, you've also got the Word document to refer back to if you need to. But what I'm trying to do is only take the clearest setups. Like, for example, you could have taken this setup, right? And if you went really lower time frame, maybe you could have got your entry somewhere, and then you could have taken this setup. But I don't want to take these just because they're not as clear, and it's sort of something that you get better at with practice. But yes, so far we're looking to go bullish. Let's put the sessions indicator back on. Right, let's look for our areas. 15-minute minimum. So let's play price out. What happens over London? Let's see if we can get a pullback into our higher time frame area. It does start to come down. Is it going to let us? Come on, give us an entry, please. Okay, we're in our higher time frame area. Amazing. Okay. So now let's see if we can get our entry again. So we want to see price close above here, and then we'll look to get in. See if it can. Okay, we took out this liquidity here, and now our high that we need to break is moved to here. And we're in New York session. Okay, so we close above that. Now that we can either do this entry down here, but it's quite low, or we can just enter in discount. So let's draw out our fibs, and we'll put our entry on the 50% here. So 50%, stop loss below. We've got all of this here to take out. I mean, look at all that. That's looking good. Targets, we'll just target the next sort of higher time frame area of supply demand. So we'll look to target here at this lower area of imbalance. So that's our target. And let's see if we get tagged in. If we don't, we don't. And that's the thing. In real trading, the issue where most people fail is because this will happen, all right? So let's see if we do get tagged in. Okay, we do get tagged in. It's looking like a straight loss. I forgot to set the order. Awkward. I'm not going to cheat. I'm going to go back and set the order. So if this does end up being a loss, it ends up being a loss. Okay, so we do get taken out there. So that's a loss. All right, no worries. And the issue with that was probably because the higher time frame structure was bearish. But no, to be honest, I'd still be happy taking a trade here. It's just one of them. You take losses, don't you? All right, so now we get a stronger one. We didn't get much displacement in the last one. So now I'm interested. This now looks a lot better. Because you see how quickly this moved away, right? So let's see if it closes above this high. Yeah, I would look to take this. I like this. Put my stop loss there. TP saying spot. Maybe we're about to take 2 back-to-back losses. Who knows? Okay, so we get tagged in. Straight away, we're running profit. See how it tagged it to the tick as well. So there was the box. It literally tagged it to the absolute pip before then taken away. And the reason that was such a high-quality setup was, again, same setup as we're always looking at, right? So we've got our areas. This is the lower time frame now, but again, as I said, price is fractal. So here's our lower time frame liquidity. There's our area of demand. Takes out the liquidity, taps the area of demand before then moving up. So now let's just go risk-free on this and let's see if it can run up. So we get taken out, break even. No worries. So we could have, what we should have done, right, here is taken a partial here and closed 50% off there. Or we could have just targeted there and we would have got a 1 to 2. So unfortunate, rookie error on my side, to be honest. Should have taken a partial. The issue is with sometimes with backtesting, it can be hard to sort of you over skip things because you're trying to rush through it, and it's important not to do that like I just did there. But higher time frame key area, yes. Liquidity taken before, yes. Entry, yes. Entry and discount. Predefined stop loss and TP, yes. Must trade inside London or New York session. That's a New York session. But that was end up being a loss. And we entered off a 1 hour demand and entry time frame was on the 3 minute. Exit strategy, break even hit. Confidence level, it was high, to be honest. So let's play, see if we can get another example. So it takes, see, there we go. How annoying is that? Took us out break even and then it flew to our take profit. But here's the thing. What a lot of people would do, and this is where most people mess up in trading, right, is they would move their stop loss to break even here. This would happen, and then they're on tilt. And then they're trying to catch this move. They're trying to chase this move. But then eventually, you know, this end up placing positions, and then you're emotional and all this sorts of stuff. And this is where most people mess up. But day's over. Let's go to the next one. Right, so what have we got? We have got... Okay, so we've got a 1 hour area of supply here. We do have some inducement before that area because of this. So let's see. Absolutely flies through that. There must have been news here. It'd be like GDP for the UK or something like that. Okay, so we would have never been in that trade, fortunately. Let's play it out. Absolutely flies. Okay, so now we're definitely bullish. We definitely want to look for buys today. Did we take out this high? We did. All right, well, this is our area of demand here. Let's see what happens if price can come back to it. Or if it just goes. No, absolutely just going to go. It's a runner of a day. So we're going to look to trade back up to this area. We have just formed another 1 hour area of demand that we could look to take a trade from. Have we got inducement? I wouldn't say yet. No, it's just, oh, okay. God, this is an absolutely crazy day, guys. It's absolutely flying price about. So what news did we have here? Yeah, it was news 130. Okay. Next area we could possibly look for is maybe a flip here. All right, day's over. No trades that day. I probably wouldn't have traded that day anyway by the look of that price action. That was messy. Right, so again, higher time frame. We've got this 4 hour area here. So okay, we're looking for sells and we want to target this low on the higher time frame. Again, how important is it that market context? We've got this imbalance before. This is our liquidity. So now if we can get up there, let's see if we can. No, again, just absolutely continues without us. Takes out the liquidity and then just dumps. Now, this is the thing with this strategy. You can vary it. So you can enter off the entry model of a fair value gap, or you can enter off a breaker block, or order block, or just entry and discount. All these different things. That's why you need to backtest so you can optimize these things for yourself and learn how it's going to work for you. And it's also a confidence thing. I like entering off supply and demand just because that's what I'm used to. I've seen it work out so many times. Sometimes when I enter just off, like, say, an imbalance here, I find for me it doesn't work as well because often price will end up coming and then taking this back out and then making the real move. Would you recommend the same strategy for M and Q? Is it more appropriate for... yeah, so I do trade futures as well, like NQ, M and Q. I personally have done the back testing and I can tell you that there is a slightly better strategy than this for that. This does work on that, but there are a better strategy which maybe I can show you guys in the future. But yeah, so let's carry on. All right, so our next area to look at would be this 1 hour area here. And you have to bear in mind, guys, this is completely random price action. Like, do you use heat map or footprints? On NQ and ES, I sometimes look at it. I don't necessarily rely on it, though. It's not really a part of my strategy. How do you determine the time frame demand supply zone 50 minutes? Yeah, it is. So 4 hour, right? So the higher the time frame, the larger the move or reaction from the area. So if I'm looking at a 4 hour sort of area of supply, then I know the move's going to be like, can you see how big this move was on the 4 hour time frame compared to that when we were looking on the 15-minute time frame? We had, like, say, this example here, right? Look how much smaller this move is. Still plenty enough to make money, right? But the move on the 4 hour was so much larger. So the higher the time frame area that you're looking at, the larger the reaction you're going to get from. So that's what I'm saying. If you want to be a scalper and you want to go on the 5 minute and you want to look for all these different areas, so look, if I see here, look at this on the 5 minute, same thing. All right, there was our area of demand, there was our inducement, we took it out. All right, and then you could use, say, the 1 minute to then look for your entry model, which you then get, and then you enter here, and you could have taken this trade long here, right? Do you see that? So the lower the time frame, obviously the smaller move you're going to get. But yeah, as I said, it does work on every time frame. All right, but let's carry it on. So price is coming for this low. We know it is. Probably not going to get trade here, if I'm honest. But this is just London session, so we'll see. I mean, price is just not going to pull back all the way up there, is it? Keeps coming back, keeps coming back. So that's that day done. Straight to London next day. No trade that day. So price may want to look to retrace up to there. Oh no, I was playing it. Is there anything here to enter? Nothing of high quality, to be honest. I would have liked to have looked for longs from here, but we didn't get a high quality zone. Still nothing high quality. We do get a type of imbalance there. So we've got this 15-minute area of supply here. And we could look to target these lows followed by those lows. On the 5-minute, if we refine it, we've got it from here. Let's see if we get an entry. So I want to see this low here taken out. All right, it does take that out. So we can look to sell here. I'm just going to do a manual sell here. I'll work it out in my head. So if I were to sell from there, I'll put my stop loss above there. And I'll target here. I'm getting a 1.8 to 1. Pips is about 10, so we'll do 10 lots. And we'll just press sell. Drag the stop loss and TP. So for those of you that don't know, you can just drag it like TradingView like that. It makes it quite easy to quickly enter if you're a scalper. And we get taken out on that one. So it's a shame, but if you look here, we saw the same setup, but it went the other way. This is what I mean. I'm kind of rushing through it now. So there was our liquidity that we took out. We tap into there, and this was our entry model actually here. So this same sort of setup repeats itself over and over all the time. So look, here you can see, right? There was just area of demand. There was your liquidity, tapped into the area of demand, and then moved up. So that was the real trade that we should have looked. I was just using this support resistance trend due to discipline. I was then losing. I started to see the OB strategy and market structure, due to which I've messed up and now just super confused in my strategy in every area. It's looking to buy and sell out. Yeah, that's the issue. You can get analysis paralysis, is what they call it. So it's important to like not get to like draw 100 million things. Don't draw support, resistance, fair value gaps, order blocks, supply, demand, everything, right? Because if you do, you're always going to be able to justify an idea for everything. So that's why I chose to master sort of supply and demand, right? Rather than fair value gaps. But if you love fair value gaps, do fair value gaps. So if you love support and resistance, do support and resistance. All these sorts of different things, it's best to focus on one thing and become a master at it. Do we need to change anything to the sessions indicator and do you follow? Yeah, slightly different strategy for gold. So every pair, right, has its different, so if I just show you the gold chart, every pair has a different characteristic and it's your job to learn the characteristic of each pair. So gold, for example, on a market structure shift, instead of pulling back, so here, all right, I can show you a prime example. Here's the setup that we're just looking at on GU over and over, remember? Right, what do we see here, guys? So we see it at demand, all right? Same exact setup. Do you see how repeatable this is, guys? It happens over and over and over again like clockwork every day on every pair, right? Here's our demand. Here's our liquidity. We mark this out, right? And you guys know that I just flicked to this 1 second ago. Like I didn't plan this. I just flicked to this randomly, right? There's our demand. There's our liquidity. Taps in and goes. Now the thing with gold, a characteristic on gold, is that what it will do is it will make the break, but it will never pull back. So this does work on gold, right? But it will just run and it won't pull back to give you that entry. It will just go and go and go. So on gold, you sort of need to not wait for the pullback and you just need to get in as soon as it breaks, which can be a little bit harder to navigate because sometimes it can just be sort of manipulation then come back. But yeah. But again, I mean, like, look at that. I can find another example here. Look. Here it is again. Here's our area of demand. There's our sweep. And then it makes the move up. Let's see if we can find another one real quick. Not quite as good, but an allowable setup. There's our area of supply. Here's our sweep. And then we get the move down. All right, same stuff, okay? So let's go back to GU now, though, because that's what we're backtesting. Can you show us a strategy that works well with NQ? Well, yeah, we'll do another session for futures. It's a bit more complicated strategy. So now that you guys understand this one, I can sort of dive deeper into it because the NQES strategy that I trade it's like this, but a lot more on it. So yeah. We can do that on another week, though. Well, maybe we can do backtesting sessions every week or something like that and really start to do them. So on the 5-minute, we've got this area here. Oh, okay, crossed on the 15-minute. Okay, so we've got a 15-minute area here. Let's look at this. However, I don't like how close it came to Asia's low. So it's a little bit scary, so I would say this is a risky trade. Let's see if we can pull back. We do pull back and we tap into this area here. We didn't get a liquidity sweep before though, so it's not necessarily valid. Okay. Still not valid in my eyes. It's still, yeah, still selling. And it took out Asia's low. There's nothing here for me. There, that would have been it. That sell from there. But again, I missed it because I was fast forwarding. But that would have been our setup there. Let's see how perfect that is again. Takes out the liquidity, taps into the 15-minute area of supply, and then drops off. Okay, so now it looks like we've shifted bullish because of some news. So we've got the news. Let's see if it can come back to this area here. It doesn't. Okay, we've got this area. I don't think we're going to get a trade on this day either. This is the thing, guys, right? It's grueling work, but you need to sit here with your strategy and you need to actually backtest it over a year. Like we've been in this session now for almost 50 minutes and we have taken 5. Obviously, it's taken a bit longer because I'm obviously trying to explain it to you guys as well. But we have taken 6 trades and we've been here 50 minutes. So obviously, it is a bit of a grind to go through and do 100 trades or 1,000 trades or backtest a year's worth of data, but it just does have to be done. All right, so we did actually come back to this area and we rejected from it. So as you can see, we took out the liquidity there and we're pushing away straight away this morning. So let's see if we can get some sort of, we made a structure change here. So if we can get a tap into this area here, I would look to take a buy. So let's see, we do get a tap. Okay. So let's take a buy here, 10 lots, drag the stop loss, and we'll just put the TP up at this wick up here, and let's see what happens. Oh, yeah, we get it taken out. Okay, no issues. So now this is the next area we want to look for. Let's see if we can get down in here. We've got this 15-minute area here. What we need to go back to is where is the higher time frame going? And the higher time frame is bullish. Okay, so we want to look for buys only. So let's see, maybe it comes down here. All right, so we've got this zone at the bottom that we might want to look to take a trade from. Let's see if we can get some sort of entry. Okay, we can enter here. Let's buy. Stop loss down here. And take profit up here. Let's see. And this one does go up. Let's move stop loss to break even. Again, guys, same strategy, just want to remind you. So this is our liquidity. This is our area of demand. And then we also have this liquidity taken out before. Then we get our lower time frame entry model. So our lower time frame entry was a break of this high, the imbalance before this demand. So this was our demand area here. And we put our stop loss below the last sweep. And then we ride it up. Now we move stop loss to break even. We can even take a partial here. So let's just takes that high, let's take a partial. All right, partial taken. So let's take a partial here. Edit. And how many lots we got on this? 10. So let's close 5. And then we'll trail the stop loss. And let's see if it can go for the full TP. So day's over now, so New York's over, and you know my rule about that. So we close that position, and let's take a screenshot of it. Marked up, it was here, and the take profit was there. And we can see our executions, take the screenshot, put it in the journal. Tags, we entered off a 15-minute demand. I personally think for this strategy, 15-minute areas are the most optimal, to be honest. Like higher time frame areas, you can get a lot of faff. So 15-minute and 3-minute is the bread and butter, in my opinion. Medium, exit strategy, manual close, out of trade times. Okay, so now we've done that. So how many trades have we got here? Do you guys want to see more trades, or do you want me to show you how to break down this data? Does everyone... I still just want to check. Everyone's following. Everyone understands the strategy. And we all know. Do you usually backtest any specific session? I am based in London. Well, England. So I trade the London session and the New York session. But I don't trade in between those times. Data, data, data. Okay. All right. Let's break down the data then. Okay, one more trade. Can you show us how to do higher time frame bias? All right, so I'll show you higher time frame bias. We'll do the recording. Anyone that wants the recording, just put your name in the webinar chat and I'll DM you the recording, okay? But I'll show you one more trade and I'll show you how to determine your higher time frame bias, and then we'll go into the data. Right, so higher time frame bias. Right, you want to always look, where's the next daily candle going to close, right? So if we're looking at this, let's just turn off all these, hide orders. Right, so where does price... No, sorry, not in this chat, guys. In the channel webinar chat. If you could put it in there after, is what I mean. Sorry, my mistake. Yeah, so we've got on daily here that we like to want. We've got here, and what you do is you just do top-down analysis. So we've got this area of demand, the same thing that we were just doing on the lower time frame, but we just do it on the higher time frame, right? So we had that area there that took out that, right? And for the way that I sort of get my higher time frame bias is, where does price need to take out? Where is the liquidity? So this is liquidity. This trend line is liquidity. That was the last place to get taken out, right? So technically, until this now gets taken out, this high, because that was the last thing to take out price, we're bearish, right? But once that gets taken out, then we go bullish. So I would still overall be in favor of sells. So I would look for this area here. But because I've got all this up here, like, essentially what you want to do is wait until the best optimal trading times, right? So this wouldn't be an optimal trading day, because I could be going up, I could be going down, right? It's not optimal. I want to wait for a clear sort of day to trade. And how do I know that? Look at this bearish candle here, right? This was so bearish, this candle, that it was almost guaranteed that the next day was going to be bearish, right? And when you come back down here, look how bullish this candle was. So now that's the next day is likely to be bullish. If the previous candle closes above the last candle, it's likely to be bullish. So what do I mean by that? Let me show you an example. So for example, this candle here, that was the high of that day. But because the body of the candle closed above that high, now it's likely to be bullish the next day, right? It's probably about an 80% chance. This was the high of this day. Price closed above it. Okay, we're going to be bullish, right? Same again. This was the high of this day. Price closed above it. All right, that next day is likely to be bullish. Okay, and you do the same again. Now, this would be a mixed day, so you're not really sure. And then all of a sudden, the price closes below that. So now we're looking for sells. Okay, and then you can see it continues to sell off. And then finally, it comes to a day where this closes above here again. So now we're bullish. Does that make sense? I feel like that was a bit skewed. But the thing is, higher time frame bias is something that you kind of just need to learn yourself a little bit by sort of backtesting and playing around with it. But yeah, this will be a last trade. So we got our entry model here. We closed below this low. Remember, we've got this high. Now, as I say, this wouldn't be the most optimal trade because I'm not really sure where the daily candle is going to go to. But we got our entry model there. So let's see if we can pull back to this, and then we'll take a final trade, and I'll show you guys how to break down the data. Now, ideally, to take this sell, again, I want to see some sort of liquidity built up. I don't have any at the moment, so it's not optimal. There we go. I got some liquidity. So now if we come up, take that out and tap into there, I'm a lot more favorable of it. I would just target here. So the next area of demand. And let's see if we get it. Doesn't quite tag us in. Let's see. I will set it just because I said that I would. I don't have high confidence in this one though, to be honest. Yeah, there we go. That was the last trade. So there we go. Right. Okay, nice one. All right, so now I'm going to show you guys how to break down the data, right? So what you want to do essentially, so I just need to make sure that I've gone through and tagged all these. So tags, I entered off what did I enter off? A 1 hour supply. As I said, that's what I mean. 15-minute zones are the most optimal for this, right? You guys are welcome to go and backtest this, of course. But the most optimal I found via my backtesting trading is that 15-minute supply and demand zones are the most optimal, right? Personally, 1 hour zones, unless there's a 15-minute zone inside that 1 hour zone, it's not as good. Setup mistakes. We'll go trade against trend. Actually, have we got one of those already? Trade against higher time frame. And then stop loss hit. Okay. So that was obviously the strategy. You guys have got the Word doc. Now, once you do finish your backtesting session, what you want to do is you want to come back to the dashboard. You want to select your backtesting account. And then you want to go find the backtesting session we did. So we did Discord backtesting session. Press apply filters. So this was the backtesting session we just did, right? We're up 13,000, so we're at 13%. We've got a 50% win rate. We win 80% of the days, and we've got a 5.22 average risk to reward, right? So that's obviously great, and that's quite profitable with an 82.48 score. So that's the first thing you want to do. You want to come over out the backtesting session, and you want to look at your stats, and you want to see, okay, what does this strategy need improving? So my trade win percentage in this case is quite low. So maybe I should look at only taking less setups that align with a higher time frame. So in this backtesting session, we didn't necessarily do that. So maybe that's something we need to improve. Now, what I would personally do is come back to the reports. Now, remember I said about tagging all your trades, right? Based on the area that you took them, etc. So whether you took them on a 15-minute area, whether you took them on a 5-minute area. Come into here. And then you can see entry off. So the 3-minute area was the only thing that we traded, just because that's my personal thing to trade. But when you're doing your backtesting session, try enter off the 1 minute, try enter off the 3-minute, try enter off the 5-minute, experiment with it, find out what is the optimal sort of way to enter with your strategy. So you could have done this, and as I said, the price was fractal, right? You could have taken in that backtesting session, save yourself time, all of the 3-minute sort of entries, the 15-minute zones on a 1-minute time frame, right? And you could have backtested all that at the same time, and then when you come out, you've got these tags to tell you which was the most profitable. So as long as you're tagging your trades as well whilst you're backtesting, that's also going to optimize and speed up the process of finding out your strategy. Because if I come out here, now I can see straight away, because I tagged my trades in that session, the 1 hour supply, I didn't win any trades on that. So I know that the 1 hour supply for this strategy is no longer optimal, and I can stop using the 1 hour supply full stop. So then what I've now done is I've refined the strategy via this. So now what it might make sense for me to do is go back into the session and now not take 1 hour zones and see how profitable it is. Do you see what I mean by you just keep refining and refining and refining until you get it absolutely perfect? Play around with stop loss placement, right? Set up tags based on stop loss and where you put it. Do you put your stop loss below the swing low, or do you put it just below like the area of supply and demand, right? And work out over time, over 100 trades, which is the most optimal, which is actually making you the most money based on data. So that's essentially what you want to do. Tagging and playbooks are crucial for backtesting, right? Playbooks we didn't really use that much, but if I come into the playbooks, right? Now, obviously, we forgot to tick them off whilst we were going through, but you want to make sure you're going through and ticking them off. So then you know whether the strategy is the problem or it's you sort of being an idiot, if you know what I mean, right? I can see here that on these trades, right? Lower time frame market structure shift with displacement. Every time I've ticked that off, it's had a 100% win rate. So you can use playbooks then to compare with whether these rules actually do work for your strategy as well. And then, of course, you can come back through. all of the trades that I took. You can come in, you can reassess them, you can add notes, you can see all the screenshots you took in the session, all the tags that you took, and then you can see this back in replay here. So if I want, I can just press replay and I can replay that trade again. How would you be able to take 1 minute and 3 minute entries at the same time to collect data, or would that require two processing? So you can do it in the same time as long as you're using tags. It's not complete, but what you could do, let's say you've done the 1 minute and you've done the 3 minute, come up to here now and then just go tags, entry off, or let's do entry time frame because that's what you asked, and then 3 minute. And now I can see the stats that I took for that session only using the 3 minute rather than the 1 minute or the 5 minute, if that makes sense. What is displacement? Displacement is a strong close above or below. So let me show you. Let's go on to the lower time frame. There'll be more examples. So let's say this here was our low that we had to break, right? See this massive breakdown here? That's displacement because we closed the full body of the candle, closed strong below this low, right? So that was displacement. And because it left behind all this imbalance, so as I said about fair value gaps and stuff like that, that's imbalance, right? Look how much we left behind, and that's displacement, okay? So displacement is a strong close above or below sort of structure. Cool. All right. So large displacement indicates that essentially there's a lot of, so in this case, selling pressure, because we had so much displacement to the downside, and that indicates that selling pressure to then continue moving down further, right? Same here, all right? We had large displacement above this high, so price displaced above this high quite aggressively, and then the buying pressure continued. So yeah, just seeing if there's a trade tab here, which there wasn't quite. But yeah, that's pretty much it, guys, right, for this strategy. Everyone's got this. If anyone has, this was more focused around learning this strategy and giving you sort of something to start with on backtesting. Has anyone got any questions around the strategy before we finish up today? Has anyone got any questions in general? Obviously, I could go on here, right, and we could all sit in backtest for the next 5 hours and get the raw data. But yeah, I'm not sure we want to be doing that. No questions? All right. Obviously, the recap competition ends this week. How's everyone getting on in the recap competition? Everyone looking to end it with a bang? Just out of curiosity as well, who of you already trade sort of supply and demand? And do you trade it similar to how I just did it, or do you trade it a completely different way? Order blocks, fair value gaps, and liquidity. And what you call an order block, is that the same as what I just showed you as supply and demand? Or do you draw an order block out differently? Yeah. See, yeah, so what makes a zone high probability, right? What makes a supply zone, right? Whether you trade ICT, fair value gaps, order blocks, anything, what makes a trade a high quality setup is that liquidity or that inducement before, right? That little sweep before. So as I said, if we just go back into one of these trades, where's our trades? Go back into the trades. Let's take a winning one, just so I can show you, right? Is that little sort of build up of liquidity just before, right? And the Asia session, previous daily highs, sort of higher time frame candles, if you can get the sweeps of them, then it's going to be a really strong move and it's going to be a lot more higher probability. But if you are trading fair value gaps as well, same sort of situation, right? We saw on GU today in the actual live market, right? Because I was looking at this today. So today we had a similar sort of situation, right? But you could have just entered off a fair value gap, yeah? So there was the imbalance, price tagged in, right? And if we go to the lower time frame, we got our market structure shift here. And then here was our order block or supply area. And you could have sold today just like this. So this is a live example that happened today that you could have taken. And you could have wrote it all the way down there if you really wanted to. All right. I trade the same, but I need more backtesting, I guess. It's more experience on the chart. Yeah, 100%. It's more. I look for more of a sweep after the higher time frame key level. Okay. Yeah. I trade the same, but I need more backtesting, I guess. Yeah, but experience is everything. I mean, chart time with something like this, it's just literally how many hours can you stare at a chart and realize the signatures of price, I guess. Like, as I said, if you look at gold, for example, gold moves completely different to GU and EU, right? And then if you look at NQ or ES, it moves then completely different to that, right? For those of you, how many steps? It's depends on what time frame you trade. I would probably say to keep yourself good, you could probably look for between 3 and 5 setups a week. Depending on how many pairs you trade, though. If you were to just trade GU, I'd say 3 setups a week. If you were to trade GU, EU, NQ, gold, you could find 10, 15 setups a week. Trade NQ. NQ depends what time frame you're trading. If, for example, if you were trading on, like, if you were scalping on the 3-minute or something, you'd find loads of setups. But as I say, this does see. Look, you saw a similar setup here on NQ using the same strategy. There was your liquidity. There was your area of demand or your order block. And can you see that we sort of took this liquidity here, and then we tapped into this order block, and then we got this huge explosive move to the upside. And this was NQ today. So again, it works on NQ. Do you actually look for divergence with DXY or USD pairs with other strategies, or do you consider it? Depends what I'm trading. If I'm trading NQ and ES, yes, I'll look for divergence between NQ and ES. But I used to look for divergence on DXY, EU, GU, gold, for example. But to be honest, I've stopped doing it as of late because most of the time it doesn't really matter that much. But NQ and ES, I do think divergence, sort of SMT, if that's what you're on about, that's really important. A lot of people, for those of you that are sort of familiar with these general concepts, the better sort of strategy on NQ and ES. So look, similar setup as well here, guys. It's the same thing, right? As long as what I've just showed you, if you can master the principles around that, you can then start to apply it in every single market. So here was the liquidity. This was built up, right? Again, here's our area of supply. What did we do? The exact same setup I've just shown you for the last hour. The exact same thing, right? This was our imbalance. See our imbalance here? This was our liquidity. What did we do? We came, we took out that liquidity, we tapped into the area of supply, and then we sold off. And this is I don't know, it's way past market close. But yeah. And again, you had the same setup this morning over here. So then there we go. That's 2 trades right there already today on NQ using this exact same strategy. So it does work on every single pair. We could even look for, just to show the example, really random pair. Someone give me a really random pair and I'll find you a setup that happened today using this strategy. Just really weird thing. BTC USD, okay? BTC, what did we get on BTC? Let's see. So this was the area. So I bet if we look on the higher time frame, that's an area. Yeah. All right. BTC USD today. This is our area of demand. This was our liquidity. This wick here. And it came in, tagged the area of demand to the absolute spot, and then absolutely missiled to the upside. Tesla. Okay. Because as I say, this happens day in, day out, every time frame, everything. If you can get your head around these basic concepts, it turns into a money printer. Tesla's probably a little bit harder, but I can already see it. Here we go. There's one there. Here was our liquidity before. It doesn't work as well with stocks, I'll be honest. Futures and Forex is better, and then there's your liquidity gets taken out, there's your order block, and there's your sell-off. Was there a better example today? But again, here's your order block or area of supply. Gets tapped into there, takes out that, and then you get your sell off. Same situation here. What do we got? Here's our area of supply. Doesn't quite tap it, so there's no trade there. What have we got down here? Here's our area of demand. Takes out this little liquidity here, taps into the order block, and then makes an explosive move to the upside. All right, you can, again, give me any pair, and I can show you this example on any time frame, on any day. It's one of the most repeatable setups you can find. And it's one of the easiest to get your head around. SPY. I just did Tesla. We can. SPY's got too many gaps. SPY is basically just. I don't want to do SPY. I'll be honest. I could do it, but I don't want to. USD CAD. Let's see. We had this today. It's not been tapped into though. So what did we get on USD CAD today? Could have had this area here. There's your takeout. To be honest, it's not the greatest setup, but it is a setup. I'm sure there's something better if we look. There's this area here. Oh, here we go. Here's a good example. All right, USD CAD. There's your liquidity. And there's the tap. And then there's the explosive move after. Okay. But you can see how quickly you can start to recognize these areas and recognize these setups, right? You guys just gave me random pairs, all sorts out of nowhere. And I just instantly can go on there and spot the areas of supply and demand and spot where the liquidity is. And yeah, it becomes that easy. But that's all because chart time, right? I've spent so long focusing on this one strategy where I mastered this one strategy. I didn't jump from 100 different strategies and spend years going back. Well, no, I did do that, but that's not what I do anymore. Could you show BTC demand again? It's the same for every single thing, right? It's the down close candle before a strong move up, or the up close candle before a strong move down. So we're back on BTC. So you want to scale through the time frames to find the one that looks the best, but this would be it here. So this is the BTC demand here. This down close candle before the strong move up, which then has the liquidity before, takes it, taps into the demand, and then absolutely missiles. So if we were on this chart when we started this session, we could have taken this. Yeah. All right. Anyone got any other questions? Did you guys find that useful at all? I hope that I just haven't wasted an hour of your guys' time. No, this is the first video I've done on this. Yeah, I got a lot of requests around people asking about my strategy. So this was just me kind of showing you guys my strategy. I mean, look, it's up to you guys. If there's enough. No, I don't do a weekly market recap. Like this is the thing. If you guys want to see recaps, trade breakdowns, this sort of thing, then I can show that you. But I just don't like. I want to know what you guys essentially want to see and what you guys want me to do for you. Yeah, as I say, put your name in the webinar chat and I'll send you the recording after. But I can tell you now that if you can master this strategy, it works, because I have years of data with this strategy and it is extremely profitable. And you've also got the Word document, don't forget. Yeah, Jin, we are probably going to finish up in a moment. Gotcha. It's going to take me a while to process the recording, so give me until tomorrow. The Word document, I'll send it in this chat one more time so you can refer back to it. Win rate for this strategy varies depending on the time of the year. I would say anywhere between probably about 60 to 70%. But it can go as low as sort of 50. But the thing is, when you're aiming for a 1 to 3, 1 to 4 sort of R multiple, like even if you were to lose one and then win one, lose one, win one, lose one, win one, that's highly, highly profitable. But obviously, as I said, I don't know how many of you were in my psychology webinar, but you know, it's sort of, if you want to lower the R multiple and increase the win rate, you can do that. So using backtesting, you can sort of optimize what's perfect for you. So if you want to lower that sort of targets that you go for, you can even go for a 1-to-1 with the strategy. And then if you were to go for a 1-to-1 with the strategy, you know, then your win rate would probably be around 80 or 90%. But again, that's up to you guys to backtest. I've given you a foundation. If you can understand the foundation, then you can tweak it to fit your own personality. And then, yeah. But the thing I do like about this strategy is that it is quite mechanical. So unless you see sort of that change, then that market structure shift, then does this align with fair value gaps? That again, yeah, you can use the same strategy with fair value gaps, right? It's whatever you want to master. I chose to use order blocks, but that does mean sometimes I miss out on trades, right? As I said, the GU trade today, sorry. As I said, the GU trade today, right? You would have only caught it if you traded fair value gaps, not order blocks, because it just missed out on the order blocks. But I can guarantee you, right? Watch this week, guys. I bet price comes out, takes this high that it made today, and then it does something like this. So does something like that, sets up, and then ends up dropping from there. But yeah. Time works well with this strategy. Same with any strategy. Time, trade it around London session, trade it around New York session, depending on the pair. If you're going to trade EU, GU, it's going to work best in London session. If you're going to trade gold, it's going to work best in New York session. If you're going to trade NAS 100 or NQES, it's going to work best in the New York session. So those are things to consider. But GJ, EJ, you know, those sort of things, they all have their own times. It's about you guys going in and finding the pair that resonates with you and finding the sort of price signatures on that pair, because every pair has a different personality, every single one, and you need to figure out what the personality is. All right, great stuff. Let's see how many people put their name in the webinar chat. Okay, in the webinar chat, guys. So let me just show you. If you want the recording, it's this chat. Really sorry to confuse you all. This chat here, just so it's easier for me to send it all to you. As I said, this was exclusive for the Discord community, so I don't want it necessarily being broadcasted everywhere. But yeah. Screen froze. Interesting. Yeah, webinar chat, the channel above this one, okay? So where we are now, we're in sort of webinars. Go to webinar chat to get put your name in there, and I'll send you the recording at some point tomorrow, because I've got to process the recording. It's going to be like an hour and a half recording, so I'll try to edit out this sort of waffle at the end for you, though. All right, everyone, have a great week, rest of week trading. Guys, do me a favor, right? If you can, right, talk about your trades in the chat. Let's get the activity up in this Discord. Let's help each other out, all right? If you've got an issue, put it in the chat, and then I'll address it. I'll help you. I'll guide you through whatever. You got a setup, send it in the trade chat, right? And I'll comment on that setup for you. I'll tell you if it's a good setup or not. All sorts of things, right? Let's help each other, all right? Have a good week, everyone. And hope you will come out this week profitable, all sorts. Thank you for joining. Bye. Have a good one all.